All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. A couple things want to go out and look at with you here and discuss here. And we'll go take a look at three things, three big parts of analysis that I use, that I've always used for both investing and trading. And, three things that you're going to see coming in the spreadsheet that I talked about on Monday. I'm not ready with it just yet to release and to be using it as a daily tool, but it's almost there. But I do want to discuss three elements of that in detail that will be important there. But before I do that, I got a question here this morning that said, reflecting on the recent past, are we looking for Goldilocks? In terms of the next trade, and it's one of those situations where, I haven't been in trade for a while, so there's, I understand there's a perception out there that I'm looking for the absolute perfect setup and scenario, and if just that perfect one that's 100% odds and go. And the reality is that's not the case. I don't believe Goldilocks exists in the market. I never have. I never will. Goldilocks exists in hindsight. Every type of hindsight analysis, there's always Goldilocks, right? There's always this Goldilocks scenario. But one of the issues I've had with the market is there's been zero price stability, so everything feels like a big gamble one way or the other, and an expensive one at that. Right, it's not one of those where, heck, even in November of 2008, I was able to go out and buy some deep out of the money, deep in the money, or deep out of the money calls, deep out of the money puts to play swings, and I could get them for pennies on the dollar. They're not pricing them like that again. Here during this move, there, the out of the money stuff is very expensive, and rightfully so. But for me, it's about the right risk reward situation that I'm comfortable with, that fits my gut. This morning, Las Vegas Sands, I talked about that. I was looking at the open and looking at the pricing, and bottom line is I didn't like the pricing on the options. Ultimately, have the options gone up? They have. They've gone up, right? That's not the issue. They have gone up. But for the risk that I was going to take, at that time, not something that, I was willing to do. Now, if you would told me the stock would be up 4.5% today, then yeah, I'd take that risk. But, I was looking at something that probably had about 4.5%, 5% increase potential over the course of the next 2 weeks. So anyway, something where, yeah, very expensive, spreads pretty high. There's a trade out there that I really like on the board right now, and it's Triple M. And, here's Triple M, and you can see it with this kind of little double bottom pattern, right in here. This little double bottom action, high volume back here in October, relatively high volume in December. We see this type of action a lot, and a double bottom is a double bottom, and double bottoms can be triple bottoms or quadruple bottoms, or consolidations before a further breakdown. But one of the things that kind of defines a double bottom or makes a double bottom more reliable that it's going higher is some sort of divergence in the momentum oscillators. And we have the MACD. We have some very nice positive divergence in the MACD here. And so, for at least a push up here into the 200 area is about what I'm looking for on a snapback rally here. With Triple M, and really nice setup. Today's low is a nice little stopping point, makes a lot of sense. It's the 7-day moving average. We've had the nice thrust up and a little cool down, to buy into, and really like the setup a lot. And I'd like to go out and trade it. And then I come into the options, and I look at the Januaries, and It's 545 to 570 for essentially the at the money options. If I go just slightly out of the money, it's 405 to 425. Which, if you've ever traded Triple M, which I've traded quite a bit, that is really high. In fact, it's high to the point that you go, okay, they're pricing in earnings because earnings are upcoming. That's where we see, the pricing like this. But earnings aren't for another 10 days after or 11 days after these options expire. Earnings aren't going to be out until I believe the 29th of January. And here's the earnings options. To get, here we're at 745 to 825. That's 2 weeks further out. And, we're talking about a 40% increase in the price. And so just bottom line, higher spread, expensive options, and any type of consolidation will get very, will get dinged big time overall. If you look at this option, I look at it 187.5 and it's going for 550. Let's say 550. 193 is the break even mark, right? Just for this option to pretty much break even by expiration, the stock has to get to 193. Now, is that possible in this environment? Oh, you betcha. It's not only possible, it's likely, right? But to really stack in gain, I need the next $5 above that, 198. So to really stack in a nice gain, I'm going to need Triple M to move up here to the levels that we talked about. Up here towards this 200-day moving average. Is it possible? It is possible. You betcha, right? But that's what I need for a 100% gain on my option. That's a monster move, right? That's a monster move, and yes, it's absolutely possible, and you could call it even more probable given the overall environment. But it's one that it comes with a steep cost, a very steep cost in terms of option value, and one where if we're just looking tomorrow and Triple M's up $2. There's a chance my option's actually red, with that. And so a lot of things are in that position. They're in that scenario here. That scenario is not going away here today. I've taken a look at some of the VXX options here. I do like how they're shaping up. The pricing is nowhere near as bad as what they have been here of late. In fact, if you come out to the next week's January, you're looking at these 47s. They were about $2 a little bit earlier. Now they're about $2.40. But, a $3 move lower in the VXX, and, you double the money on that. That's quasi-realistic there. There's some realism in that, or potential of that taking place here, especially with the jobs report coming up on Friday. And, what do we tend to see after jobs report? Well, if we don't see a big sell-off in the market on a jobs report, we tend to see the VXX, drop, after that report. So, anyway, that's some of the stuff out there. The bullish engulfings that I talked about earlier today, they're still all intact. We haven't seen those erased. Things like a Micron, really kind of holding up. Some of those things that have lagged a little, like an Apple, have started to pick up here in the last hour. Even an Amazon, which this morning was down $20, it's now up 30. This wasn't a bullish engulfing earlier this morning. Now it is. So there are a lot more stocks that are in that bullish engulfing area. But things like, U.S. Steel that was a bullish engulfing this morning, it really hasn't tacked on a ton of gains, right? So we are seeing some differentiation elements out there in play today, and we're starting to see a little bit of comeback in some of the healthcare, the XLV, action out there, and even seeing a little bit come into some of the transports, and the IYT here. starting to pick up a little bit. This was an early laggard this morning. Things like CSX, which went all the way down to 60, back up here to 62 with CSX. CSX is one I would love to jump in for the challenge. And if you look at the option, just the spreads, they're just too rich right here for me to be able to go and do for the challenge on a shorter term basis. But the regular Januaries, they're in a decent spot, spread wise. But this does have earnings on the 16th of January, so earnings are priced into it here as well. What's interesting about CSX is with earnings priced in, the options aren't much more expensive than some of the stocks out there that don't have earnings priced in. So very interesting dynamic there. There with it. Another really interesting dynamic here today: Verizon and AT&T. You see Verizon down about 1% here, AT&T up about 3% here. AT&T making a very big move here with it, and this type of move from a bullish standpoint in the market itself, to me is a very bullish move. It's one that makes a lot of logical sense based on the dividend, based on the fundamentals. And we're starting to see some logical type of action out there in the way different stocks are moving and the way some of the differentiation is out there in the market today. And so, to me, that's one of the things that's very encouraging. AT&T risk reward right here. Is it great? Probably not, but it is one where making that kind of snap back here, overall very encouraging. And then seeing the breakout in Brazil basically going on is with Brazil up about 5%. Overall that's very encouraging. So some real bright spots here. You look at the EEM. You see not a bullish engulfing, but a little bit of a piercing line type action coming into play with it. I've priced out the options on the EEM. I find them interesting. You see China lagging. China had the manufacturing data last night that basically catalyzed the sell-off in S&P futures, as it catalyzed the sell-off in Asian markets. So we're seeing that here today. But overall, there's some very tempting things out there. In terms of where some things are sitting, where the market itself is sitting. SPY calls are still just kind of ridiculously priced, to where, yep, you got to get the 40, 50 or greater move, to really pay them off. Apple calls, I think, are kind of interesting here. You have Apple here. It has earnings at the end of the month. But, it's lagged a little bit of some of the other tech here today. But, very, very... an option here where a $7.50, $8 move, you double your money, right? And so, it's at 158 or 166 is basically what gets you a double. So right up here, is that possible? Is that realistic? Well, that erases the flash sell, this breakdown sell, which is what we're starting to see a lot of stocks do. They're starting to erase this last leg of sell that was here, and that's very common to see happen. So that's not a very unrealistic target here for it. You look at something like a Microsoft, here as well, which has already erased most of that last flash down. You look at something like an Adobe, which is outperformed here, creating that little double bottom action as well. Doesn't have the positive divergence, though, in the momentum oscillators. But, a candle today coming off the 7 that, is traditionally bullish. I think one of the easier buy scenarios for, just looking and saying the odds are really strong in my favor is to see the market sell off into the close and see the Adobes of the world sell off into the close and then gap up a little bit tomorrow. Generally, that's a very strong sign that, okay, the sellers are done, the buyers are ready to take over, at least for a little while. And let's face it, Adobe's had pretty much one up day, and the rest have been just kind of static here. It had that up day where the market was up 100 points, and then the rest of the days have been just kind of consolidation, grinding here with it. So anyway, those are just some of the things I'm looking at, some of my thoughts here on where some things are at. I'm very anxious to jump into a challenge trade. I'm ready to get that ball, rolling here. But at the same time, I have to make sure it's, just for me, it's in the right spot, here overall. There's some really interesting action in some of the energy sector out there, from Range Resources to Halliburton to Schlumberger to even USO. We have oil snapping back to 47 here today. And, this is one of the bigger moves for oil in terms of just really seeing major buying coming in. And, do we start to see that translate into a Valero who's pushing above the highs from the last 3 days, right? Which generally for Valero is a recipe for up and away. We start to see, I talked about Conoco this morning and some of the bullish engulfing action coming into it. And, that's there here this morning. Some of the things like an Exxon, same type of bullish engulfing action here. So some very, very overall positive action within the energy space here today. But again, you have to keep in mind there is zero price stability right now when it comes to energy. And, the way oil is trading, it is something where, key levels are getting blown out here and there. And, it's going to continue that way overall. But anyway, overall, very encouraging price action here. It is something where we're not seeing the overall market metrics change a ton, but things like the bullish percent index that changed last week, continuing to go on higher here today. The number of stocks trading above 7-day moving averages remains in a bullish position. We have small caps here this morning that were lagging early, that started to, peak up, and they're up 0.5% with the market up 0.3%. So, okay, we're not talking about a major change in differential. Transports, we're not talking about a major change in performance here, but, we are talking about a little bit of an everybody back in the pool type of mentality in the market, here at least so far today. Alrighty, I've rambled on here a little bit, so I'm going to end this video, and I'm going to jump right back on, and we're going to go take a look at the average true range, the 37 stochastics, and point and figure charts here, and start to lay the groundwork for some of the stuff that's up and coming here as we go forward. We'll talk to you soon. Take care.